The committee will come to order, a quorum being present. Without objection, the chair is authorized to declare a recess of the committee at any time. Pursuant to Committee Rule 3 and House Rule 11, the chair announces that the chair may postpone further proceedings today on any vote relating to any matter under consideration during today's markup. Without objection, all members will have 5 legislative days within which to revise and extend their remarks and to submit additional materials to the chair for inclusion in the record. I now recognize myself for 5 minutes on the measures under consideration today. In 2019, the committee had a very productive year and advanced legislation on a wide range of issues to benefit consumers, investors, and the economy. The committee marked up 69 bills and convened 74 hearings to inform the American public on important issues in our jurisdiction. 55 Financial Services Committee bills passed the House, and I'm proud to say that 50 of those bills had broad bipartisan support. In 2020, this committee will continue to address the challenges that face Americans and ensure that the economy is fair for everyone. Today, we will mark up a number of housing bills that continue the committee's efforts to make housing more affordable and fair. Last year, the committee held a hearing on the importance of federal investment in housing infrastructure, which is just as critical as the funding needed for our nation's roads and bridges. Today, we will mark up my bill, H.R. 5187, the Housing is Infrastructure Act, which would authorize more than $100 billion in federal spending for the nation's affordable housing infrastructure, including public housing, supportive housing for seniors and people with disabilities, and rural and Native American housing. We will also consider H.R. 149, the Housing Fairness Act, a bill by Congressman Green, which would authorize increased funding for the Department of Housing and Urban Development's Fair Housing Initiatives program and make a number of reforms to the program. H.R. 4351, the Yes in My Backyard Act, a bill by Congressman Hecht, which would require localities that receive community development block grant funding to submit a plan to track and report on the implementation of certain land use policies that promote housing production, and H.R. 5931, the Improving FHA Support for Small Dollar Mortgages Act, a bill by Congressman Clay and Stivers to require the Federal Housing Administration to conduct a review of its policies to identify any barriers to supporting mortgages under $70,000 and report to Congress within a year with a plan for removing such barriers. We will also consider a pair of capital markets bills. H.R. 5930, the Workforce Investment Disclosure Act, a bill by Congresswoman Acne to require the Securities and Exchange Commission to require public companies to disclose how they train, compensate, and otherwise manage their employees, and H.R. 5929, the Shareholder Political Transparency Act, a bill by Congressman Foster to require public companies to disclose to both the SEC and the investors the amount, date, and nature of the company's expenditures for political activities. Additionally, we will mark up H.R. 5932, the Ensuring Chinese Debt Transparency Act, a bill by Congressman Hill, which seeks to address concerns that China is trapping developing countries in a cycle of predatory debt. And finally, we will also mark up the committee's views and estimates on the budget for fiscal year 2021, including our strong concerns with Trump's proposed cuts to vital programs for America's most vulnerable communities. So I thank the members for their outstanding work on these bills and measures. I now yield 5 minutes to the distinguished ranking member, Mr. McHenry, for his opening statement on these measures.
Well, thank you, Chairwoman Waters, and thank you for holding today's markup. I know we have areas of agreement during this markup. We also have areas of disagreement, but let's start with areas of agreement. As I've raised in this committee and over my time, significant period of time in Congress, I want to start by saying that I'm pleased that my colleagues on the other side of the aisle are agreeing with Republicans that China poses a real threat to our national security. I think we've had a broader conversation in this committee than we've ever had before, and I'm grateful that Chairwoman Waters has been eager to engage in this conversation. And I'm grateful that this year we're seeing, especially in this markup, committee Republicans have a bill through French Hill that helps with this debt trap that is part of the Belt and Road Initiative from the Chinese Communist Party. And I'm glad that we can actually have a bipartisan vote on something important as it relates to China. In fact, a report by the Center for Global Development found 8 Belt and Road Initiative countries are at a high risk of debt distress due to Belt and Road Initiative loans. Pakistan and Cambodia are 2 examples of those countries. So Mr. Hill's bill is a much-needed step towards combating China's plan to dominate the global economy by exposing their debt trap diplomacy. I'm glad to see we'll be able to consider several housing bills. Affordable housing remains an important issue for this committee as well as the country. Committee Republicans agree there's no place for discrimination in society. We need to ensure HUD and state and local enforcement entities have the tools they need to enforce the Fair Housing Act. This includes holding bad actors, even cities that are represented by members of this committee, making sure they're held accountable, and ensuring that they do not benefit from any type of federal funding without significant improvements to their administration of those funds. We also need to bring our housing programs into the 21st century. I commend Chairwoman Waters' commitment to addressing the housing shortage in this country. But I don't believe giving $100 billion to America's East and West Coast cities is the solution. This approach will not increase housing availability or reduce the number of Americans who go homeless every night. Part of the solution is before us today. The bipartisan Yes in My Backyard Act is a good step forward in understanding the local barriers that hinder our nation's housing stock. We need to look at local zoning laws. We need to look at the regulatory barriers. We need to look at the local processes and procedures that are harming our cities. There are fantastic programs like the Rental Assistance Demonstration Program that was an Obama administration initiative pushed very strongly by them. What we've seen is 120,000 units of public housing using $12.6 billion of private sector dollars to make them the best available public housing stock. Just a few remarks on the latest mandatory disclosure bills, which come to us after countless others. There's nothing new to see here. It's just more mandates on the private sector. And I get it. Some of the members of this committee need to look like they're accomplishing something of some value to their constituents. But these bills will not help families save for their first home, for their child's college education, or for their retirement. In fact, these 2 bills will do nothing but raise compliance costs for companies that are already public and deter private sector firms, non-public firms, from going public. Finally, the last 2 items we'll consider the Democrats' budget views and estimates, and the committee resolution appointing Republican members to subcommittees. As I've said many times before, Republicans stand ready to work with Democrats to advance policies that promote competition, free markets, and innovation. We support policies that ensure our financial system is safe and sound and protect consumers. The policies reflected in the views and estimates before us today are once again a polar opposite. Democrats want to spend more, create more bureaucracy, nationalize more of private industry, and create more regulation. At least that's what the views and estimates say. These policies will shrink our economy, cost American jobs, hinder markets, and raise the cost of financial products and services for all consumers, ultimately failing the individuals, families, and small businesses that these policies are intended to help. And so we disagree on those items, and I think that is a disagreement that is not is representative of where we are as individuals and members of this committee. And I think that fulsome debate is a reasonable one for us to have. And so with that, Madam Chair, if I may at this time ask unanimous consent to consider the committee resolution appointing Republican members to subcommittee and task forces.
Without objection, such is the order.
And with that, I'm grateful for the newest member of the committee, Van Taylor, to have two subcommittees and be a member of the Task Force on Artificial Intelligence, for Mr. Stile to move to the Capital Markets Subcommittee, and for Mr. Posey to be a member of the Housing and Insurance Subcommittees. They're all fine members, and these are good committees commensurate with their capacities and background. So with that, I yield back.
The chair now calls up H.R. 5931, the Improving FHA Support for Small Dollar Mortgages Act of 2020. The clerk will report the bill.
H.R. 5931, a bill to require a review of the effects of FHA mortgage insurance policies, practices, and products on small dollar mortgage lending and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America in Congress assembled. Section 1, short title. This act may be cited as the Improving FHA Support.
Without objection, the first reading of H.R. 5131 is dispensed with. The gentleman from Missouri, Mr. Clay, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance and are on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 5931, offered by Mr. Clay of Missouri. Strike all after the enacting clause and insert the following. Section 1, short title. This act may be cited as the Improving FHA Support for Small Dollar Mortgages Act of 2020. Section 2, review of FHA small dollar mortgage practices.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Missouri for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair, and I want to start off by thanking my colleague, Congressman Stivers, for working with my staff and me to craft a bill that will ultimately try to help close the affordable housing gap. And I look forward to working with him on other legislation and policy going forward. The Clay-Stivers amendment in the nature of a substitute to H.R. 5931, the Improving FHA Support for Small Dollar Mortgages Act of 2020, would require the Federal Housing Administration to conduct a review of its policies to identify any barriers to supporting mortgages under $70,000 or small dollar mortgages, and submit a report to Congress within a year with a plan for removing such barriers. In a recent report, the Urban Institute found that despite having similar performance indicators, credit profiles, loan-to-value ratio, and lower debt-to-income ratio, the financing options to purchase, renovate, or refinance homes valued at or under $70,000 remain limited compared to mortgages between $70,000 and $150,000. In fact, the report found that small dollar mortgage loan applications in 2017 were denied by lenders at double the rate of denial for large mortgage loans, and that these denial rates were not explained by the credit worthiness of the applicants. The Urban Institute report further revealed that FHA is disproportionately failing to serve this market despite its mission to serve underserved borrowers. Specifically, the report found that FHA serves 24% of the overall market, but only 19% of small dollar mortgage market. Only a quarter of all 640,000 homes that were valued at $70,000 or less and sold in the U.S. in 2015 were financed through a home mortgage, while the remainder were largely cash purchases by investors. While cash-rich investors can dominate small dollar housing inventory in low-cost markets through cash purchases, individual borrowers tend to rely on traditional mortgage products, and the lack of access to such products can be a substantial barrier to home ownership. According to the Harvard Joint Center on Housing Studies, households making at least $75,000 annually who historically would have been homeowners accounted for 75% of growth in renter households between 2010 and 2018. Increasing access to small dollar mortgages could be one way to help shift these households back into home ownership. Let me add that this bill is supported by numerous groups, such as the Center for Responsible Lending, the National Consumer Law Center, the National Association of Realtors, the Asian Real Estate Association of America, the Community Home Lender Association, the National Association of Real Estate Brokers, Mortgage Bankers Association, the National Association of Federally Insured Credit Unions, the Independent Community Bankers of America, the Affordable Home Ownership Coalition, and the National Community Reinvestment Coalition. Again, I urge my colleagues to support this bipartisan study to identify any barriers to supporting these small dollar mortgages and report to Congress within a year with a plan for removing such barriers to financing for credit-worthy borrowers, and I yield back.
Is there further discussion of or amendments to H.R. 5931?
Yes, ma'am.
For what purpose does the gentleman from Ohio seek recognition?
Madam Chair, I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chair, and I want to thank you for including this important bill on this markup. I want to thank Chairman Clay for his incredibly hard work to help people who are trying to live their own dream of home ownership, and we've seen a reduction in the mortgage loans for properties that are under $70,000, and we need to figure out what's going on, and we need to fix it. This bill would direct HUD to review FHA's policies, practices, and products to identify any obstacles that might be impeding the market for these small dollar mortgages. That's defined as mortgages under $70,000. The market for mortgages below $70,000 might amaze people inside the DC Beltway, but in counties in my district, in Athens County, in Clinton County, and Logan County, that is the lion's share of the loans in those rural areas, and other urban areas have the same issue. A study conducted by the Urban Institute found that the number of small dollar mortgages plummeted 38% between 2009 and 2018. It's unclear why it happened. It's likely that originators just left the market or reduced the lending in it because the loans just weren't profitable anymore. But it's important that we figure out what's going on and we get it fixed. It's important to note that this market consists of many traditionally underserved groups that could benefit greatly from building equity in a home. In fact, a study by Duke University in 2018 showed that reducing disparities in home ownership by race would narrow the racial wealth gap by 31%. I think it's worth noting that we have to address this. An FHA study on this can help move us forward. I want to thank Chairman Clay and Chairwoman Waters for including language that I requested in the bill that makes sure that anything FHA does can't make a policy change that would adversely impact their insurance fund, because if there is a severe downturn, FHA would quickly blow through their limited capital and trigger a potential taxpayer bailout. So we need to look out for that. But nobody on the committee wants that to happen, but we do want to make sure that people that require small dollar mortgages can get access to financing. And I think this review is a responsible way to move forward. I would urge all my colleagues to support it. I yield the balance of my time to the ranking member, Mr. McHenry.
Well, I thank my colleague for yielding, and I want to first commend you, Mr. Stivers, and you, Mr. Clay, for working together on what is a quite reasonable approach to an important subject. This issue does not affect every member's constituent before this committee. It affects mine, though, and it affects a lot of folks that are in lower cost areas, those with rural areas in their districts, and even in high cost areas, it does affect constituents. It just doesn't, not at the same rate. So I think it's important that this review take place because we want to know if this is a government problem, a government initiated problem, or if this is something that is happening in the marketplace that needs to be remedied. Is there a market failure here? It could be the case that it's rules out of FHA or CFPB or laws that we've passed. And so I think this is a reasonable undertaking to understand why otherwise creditworthy borrowers are underserved in this smaller dollar mortgage space. And so, Mr. Stivers, Mr. Clay, I commend you for the good work here today and encourage the adoption of this bill, and I yield back to Mr. Stivers.
I yield back the balance of my time, Madam Chair.
Thank you. I now recognize myself for 5 minutes. As we work to improve access to home ownership, we must be cognizant of the unique challenges facing different communities across the country. In rural communities and those that are still struggling to recover from the devastating foreclosure crisis, first-time home buyers and working-class families are not able to take advantage of lower housing values because of a lack of access to small-dollar mortgage loans. Specifically, I'm talking about mortgages for $70,000 and less. These small-dollar mortgages are denied by lenders at double the rate compared to larger loans, and this trend cannot be explained away by differences in credit worthiness of applicants. And while the Federal Housing Administration was designed to serve underserved markets, the data shows that FHA is also disproportionately failing to serve the small dollar mortgage market. Mr. Clay's and Mr. Stivers' bill would address this problem by requiring FHA to identify any barriers to better serving the small dollar mortgage market and come up with a plan to reduce those barriers. So I urge my colleagues to support this bill. And I'll yield back the remainder of my time. And is there further discussion or amendments to H.R. 5931? For what purpose does the gentleman from Florida seek recognition?
Thank you, Madam Chair, and I only have a question. Does this
The
cover,
gentleman is recognized for 5 minutes.
does this cover mobile homes?
Mr. Lawson, to whom are you directing a question to?
I would,
If the gentleman would yield.
yield to Mr. Representative Clay.
It is my understanding that this covers any home under the price of $70,000. So the short answer is yes, it would cover if they're under $70,000 in value. It would cover the mobile home.
If the gentleman would yield,
I would yield.
it would cover some of those loans. Some mobile home loans are done as chattel loans, as you may know, which are more expensive and more, and so it would not potentially cover every one of those loans, but it would cover some of those loans. And, you know, I think it will start to move the ball forward. I yield back.
Is there further discussion?
I yield back.
As he just gave. If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those opposed, nay. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 5931 as amended to be reported favorably to the House. All those in favor of approving H.R. 5931 as amendment say aye. Those opposed, nay. In the opinion of the chair, the ayes have it, and H.R. 5931 as amended is
Chair.
reported favorably to the House. For what?
May
Does the gentleman from Missouri seek
request a
recognition?
recorded vote?
A recorded vote has been requested. All those in favor of a recorded vote shall raise their hand and be counted. Okay, there is a sufficient second, and a recorded vote is ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. The chair now calls up the committee's views and estimates for fiscal year 2021. The clerk will report the committee's views and estimates.
Views and estimates of the Committee on Financial Services on matters to be set forth in the concurrent resolution on the budget of fiscal year 2021. Pursuant to applicable rules and laws, the Committee on Financial Services transmits to the Committee on the Budget the following views and estimates on matters within this jurisdiction or functions to be set forth in the concurrent resolution on the budget for fiscal year 2021. Building a fair economy for all Americans. In the first year of the 116th Congress, the committee put consumers and
Without
investors-
objection, the first reading of the committee's views and estimates is dispensed with. Without objection, the committee's views and estimates are considered as read and open for amendment at any point. I now recognize myself for 5 minutes to explain the views and estimates. Earlier this month, the President released a cruel budget that cuts critical programs within the jurisdiction of this committee. Democrats will not stand for a budget that harms families, consumers, investors, and small businesses. Instead, this committee has been and will continue to be about the business of protecting consumers, expanding and supporting safe, decent, and affordable housing, working to end homelessness, promoting diversity and inclusion across the financial services industry, and expanding opportunities for small businesses and entrepreneurship. By contrast, Republicans added $1.9 trillion to the debt in order to provide tax cuts to the ultra-rich mega banks and corporations. Republicans are also supporting Trump's reckless trade war, which has been devastating to farmers, manufacturers, and the economy as a whole. For example, bankruptcies at family farms increased by over 20% last year alone. Meanwhile, Trump's appointees have rolled back important protections put in place to protect workers, the environment, the healthcare system, consumers, and our economy. At the Consumer Financial Protection Bureau, Trump's appointees are letting bad actors escape accountability. The Trump budget would also reduce access to affordable housing, cut community development, and raise rents on the most vulnerable populations, including seniors. This committee's budget views and estimates lays out a vision for robust funding for the critical programs under our jurisdiction and the agencies that administer them. It also describes the legislation that we're advancing to accomplish these goals. For example, later in this markup, we will be considering my bill, H.R. 5187, the Housing is Infrastructure Act, which will provide over $100 billion in funding for HUD programs to sustain and create affordable homes. Committee Democrats will continue to advance legislation that supports families and communities across the country. Is there further discussion of or amendment to the committee's views and estimates?
I move to strike the last word.
The gentleman is recognized from North Carolina for 5 minutes.
So let me begin by raising this question of when the Democrat leadership will put the House budget resolution on the floor. I raise this question because it's already been publicly announced that the Democrats don't intend to do a budget. I know we're not in the Budget Committee, but they outlined that they're not even going to try to pass a budget resolution as required under the 1974 Budget Act. So I raise that as the first question. So we're doing budget views and estimates to go into a budget that won't exist. Now, I actually don't think that's altogether bad because I completely disagree with this set of views and estimates and have previously disagreed with Democrats' budget offerings. From the mere left to the hard left and everywhere in between, from the socialists to just merely liberals, and their offerings on the House floor for the budget. So that's number one. Number two if you look at the budget views and estimates, there's not even one mention of the word China. This is one of the greatest geopolitical threats that we face as a country, the rise of China. There's not a mention of the fact that the trade negotiations have resulted in positive things now with phase one of the China trade arrangement announced by the White House just a few weeks ago. And so those two things, I think, are important things to note before we get into the contents of this. Now, obvious with this budget views and estimates, they criticize a director of an agency and her operations of the very unaccountable bureaucracy that the Democrats created under Dodd-Frank, and that's at the CFPB. They want to criticize the president and the booming economy he's created, and they want to criticize the policies that help create the booming economy that has led to wage increases for every segment of the American population. Workers have seen the strongest earnings since the Great Recession started. We see a 3.1% increase year over year, with average hourly earnings growing at a minimum of 3% each month. And over the last 3 years, the Trump administration has reduced regulatory burdens from the previous administration to the tune of $45 billion of effect in our economy. So these things are actually important to note, that the prosperity that we're feeling are a direct result of good policy. These budget views and estimates call into question all of those firm good policies that have had that firm good economic impact. And so I stand against this, not because I don't think people of goodwill are offering it, but because I disagree with the fundamentals of their argument here. We have the lowest unemployment rate in the last 50 years at 3.5%, and now we hover at about the same at 3.6%. The unemployment rate for every segment and demographic of our country is the lowest it's ever been recorded, and labor force participation rates are actually up. So there are good things that are happening in the economy. And so I think we have to foster vibrant financial markets to keep this economy rising. We need to empower families. We need to empower Main Street job creators. It means protecting our national interest. It means being tough on China in a smart and appropriate way. It means seeking housing affordability through greater choice and competition, not social fiat, not big taxpayer dollars, but regulation changes that give us greater value for the dollars that we're spending. So we have disagreements here. And I think the debate we're having here is not an unhealthy one. It's a disagreement on a vision of how to achieve prosperity. So while we may disagree on a lot of components of this, I think the debate is a healthy one. Because what we'll see here is that there is some overlap in what we care about and how we seek to affect that change. And out of this debate, I think we can be better as committee members. As an example, the issue of China. Chairwoman Waters and I have had a big debate about China and how, not that we disagree on tackling this threat of China. I don't think we disagree there, but how to do it. And I think we have a better understanding now than we did this issue of China. And as a result of the debates that we've had and this committee have had, I think we have a better understanding. And I think on a going forward basis, we can have greater alignment on this as a result of the whole, I think, honest and holistic debates that we've had. So with that, while I disagree with the budget views and estimates, I think we can have a healthy debate about the direction of our country. With that, yield back.
Is there further discussion of our amendment to the committee views and estimates? The gentleman from Arkansas is recognized for 5 minutes.
Thank you, Madam Chair. I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget.
Madam Chair, I move to suspend the reading.
Without objection, the amendment will be considered as read.
Thank you, Madam Chair. I offer this amendment to express the committee's support for the multilateral agreement to increase the capital to the International Finance Corporation, the IFC. The IFC is the private sector arm of the World Bank Group devoted to investments that help lift developing countries out of poverty. This is challenging work, and our committee has worked on a bipartisan basis to help the bank be as effective as possible. As the views and estimates indicate, the Treasury Department has agreed, along with representatives of the World Bank shareholders, to increase the IFC's capital base by $5.5 billion. Let me reiterate, this represents an international commitment that's in essentially the entire globe all the participants in the World Bank have endorsed. However, because of the IFC's rules, the United States must first authorize the capital increase through statute before it can go forward. As a part of this agreement, the Treasury Department secured substantial reforms at the World Bank that our committee has been pushing for and arguing for years. That means less assistance for China and more for the poorest countries. This means focusing the staff on the countries where tackling poverty is the hardest. And incredibly, the IFC portion of the World Bank's capital increase will cost the United States, our taxpayers, nothing. We simply have to authorize it. In last year's omnibus appropriations bill, the vehicle used to move the authorizations forward, we only included an authorization for the World Bank's main lending arm, the International Bank for Reconstruction and Development, the IBRD. The measure failed to include sign-off for this IFC funding authorization, even though the authorization has broad bipartisan support. In fact, when we had a hearing on the capital increase on November 1st last year, I asked all the witnesses that our Democratic friends invited to tell us whether they thought we should oppose the increase in the IFC, and not one of those witnesses raised their hands. Beyond our borders, this holdup has proven extremely disappointing to our friends around the world who are unable to contribute their resources to the IFC until Congress has given the green light. I want to particularly highlight the voices who would benefit most from the capital increase, those countries and peoples of sub-Saharan Africa. As my friend, the gentleman from Missouri, Mr. Cleaver, knows, we received a letter which is attached to my remarks, and I'll ask for its insertion in the record, from last November from all the World Bank's executive directors representing sub-Saharan Africa. And they detailed just how important the IFC capital increase was in order to fight poverty, create jobs on the continent. They underlined how much they valued the World Bank's private sector window, which channels private sector investments to the poorest countries of the world. They highlighted how the IFC had agreed to transparency reforms in response to constructive feedback from our chair, Chair Waters. This will make it all the more puzzling to our allies, both in Africa and around the world, if this committee defines to authorize this multilateral agreement. My amendment highlights that we value the endorsement of the Sub-Saharan African executive directors, and we commit to authorizing this capital increase from this Congress in this current final year. I would ask unanimous consent, Madam Chair, to enter the executive director's letter to Chairman Cleaver and myself into the record.
Without objection, such is the order.
Thank you, Madam Chair. In prior years, the committee has expressed bipartisan concern and even outrage that we thought the World Bank had let down the peoples of Africa. But now we have a case where the bank has worked with their African friends in designing the IFC agreement, and those friends are now asking for this committee's support. We should provide that support and vote yes on this amendment, and I thank the chair, and I yield back the balance of my time.
Are we going to be on different? I now recognize myself for 5 minutes. I am very concerned about the way that Mr. Hill has described what is happening at the IFC. I spent a considerable amount of time with the head of the IFC and members that he brought to Washington to talk with us. And as you know, my predecessor, Mr. Bonifrank, has spent an awful lot of time working on all World Bank issues, having been concerned, over the years about the World Bank's ability to provide support in any number of ways without causing those who are recipients of the support to end up trying to pay back debt instead of investing money in their own infrastructure and housing and education, et cetera. And so the IFC is one area that Mr. Bonifrank and the staff, who's still with us, paid a lot of attention to. We didn't fail to authorize the IFC capital increase. We decided to withhold the authorization until we could come up with an agreement with the Treasury and the IFC to an appropriate set of reforms. We certainly believe that reforms are needed, and I think we had a tacit agreement from the IFC, the head of the IFC, that they recognized that perhaps reforms were needed. They just wanted to move as quickly as they could to make sure that they got the support that they needed for the capital increase. And so I would basically say to the members of this committee that it is important that we accept responsibility and we act appropriately when we're dealing with these kinds of issues. It would be easy to authorize the IFC without reforms, but then we would simply be moving to areas of privatization without an understanding about how these grants would be given to private businesses. They did not have any explanation of how they would send out requests for response to proposals, et cetera, et cetera. And so I would like a consideration for what we're doing to get the kind of reforms that I think are absolutely necessary. And again, we did not fail to authorize the IFC capital increase. We decided to withhold the authorization until we can get an agreement on the reforms that we are negotiating. With that,
Would the gentlewoman yield for a question?
I yield to the gentleman.
Yeah, thank you, Madam Chair. Would you say that you're committed, though, that we get the reforms and the IFC authorization done before this Congress expires? In other words, do you believe that you could?
Yes.
Because the concerns, as I understood it, were they were making progress on meeting the suggestions that you'd made. And what's, I think, important to our multilateral relationships and to Africa is that Congress, as soon as possible, promptly gets this authorization done. So
I'm committed to that, to doing that. And again, I do not want you to believe that somehow we are not interested in.
No, I don't. I never would think my chairwoman was not interested in this important topic. And you've led on the reforms. But I do think here it was a missed opportunity to try to use that pressure of the omnibus to get those done last year so that we could move on and have this money freed up for use in Africa. So if we could, if you've got a way to suggest a wording change, I think it would send an important signal to our friends around the world that we're committed to getting this authorization done in this Congress, perhaps by saying that we intend to finalize our reforms and have this authorization complete as a part of this, in this fiscal year, which would mean before September. I know this is a 2021 budget that doesn't exist, but I'm thinking this Congress is the important part, that we get this done in this Congress.
Appreciate the gentleman coming up with some wording that is acceptable to me.
Good.
And I don't know if that would require us to further amend your amendment, or if this can be reworked in a way that does not require an additional amendment.
Well, with the chairwoman's request, I'd be pleased to withdraw my amendment and offer it at a later time and try.
Without objection, such is the order. I appreciate that.
Madam Chair.
For what purpose does the gentleman seek recognition?
I have an amendment at the desk. It's with regards to Cecil.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services.
Madam
offered-
Chair, I move to suspend the reading of the amendment.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair. For over a year, I have continuously expressed grave concerns regarding the Financial Accounting Standards Current Expected Credit Loss Standard, better known as CECL. This committee first held a hearing on the matter in 2018 when the Financial Institutions Subcommittee examined the potential negative effects of this ill-advised accounting standard. Since then, numerous individuals, and on a bipartisan basis, have voiced concerns in front of this committee regarding CECL. In April of 2019, Jamie Dimon lamented that CECL will disproportionately affect small banks and credit unions and that it will cause those institutions to decrease lending at exactly the wrong time. In May of last year, FDIC Chair Yelena McWilliams said concern over CECL is the first thing community bankers bring to her attention when she meets with them. In October, before the Consumer Protection and Financial Institutions Subcommittee, numerous minority depository institutions discussed how CECL is going to hinder their ability to serve low-income and minority communities. And finally, in January of this year, the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets held a hearing where FASB Chairman Golden testified. Throughout the hearing, nearly every member of the subcommittee on both sides of the aisle expressed severe concerns over CECL. Specifically, members of this body were astounded at the lack of understanding displayed by FASB excuse me, as to the actions of their actions it could have on the economy. To recap that hearing for my colleagues who were not in attendance, FASB promulgated CECL, the most significant accounting change in decades, and conducted no quantitative study, no cost-benefit analysis, and did not solicit sufficient comment from stakeholders to determine how their accounting standard would affect access to credit for consumers and the economy as a whole. Outside of this committee, the groundswell of opposition to this standard has been staggering. Former FDIC Chairman William Isaac and former comptroller under President Clinton, Eugene Ludwig, wrote scathing op-eds about the potential effects of CECL. In addition, the Center for Responsible Lending raised concerns that CECL will limit access to credit for low to moderate income consumers and communities of color. Despite the numerous concerns we've heard from CEOs to consumer groups, to small credit unions and everybody in between, FASB has thumbed their nose at the financial services industry and Congress by not reconsidering their proposal. The amendment I'm offering today simply restates the views and concerns of this committee that were expressed during the committee hearing, that CECL will have negative effects on consumer access to credit, particularly in low and moderate income and minority communities, and will have a negative effect on our economy in a downturn. Those negative effects could have massive budget implications, as we've seen in the past. As members of the House Financial Services Committee, we are tasked with ensuring a safe and sound financial services industry and promoting economic freedom for everyday Americans. As the chairman expressed in her opening remarks, we need to be sure we make sure that no harm comes to consumers and taxpayers. That's our job. This responsibility includes protecting all of the ability of consumers to have access to credit as well, and ensuring no harmful effects of the economy are stopped and eliminated. With the growing concern of the ramifications of CECL's implementation, the House Financial Services Committee must take action to prevent this standard from being fully implemented. With that, I urge my colleagues to support this amendment, which again simply restates the views and concerns of this committee that were expressed during the hearing in January. And with that, Madam Chair, I yield back.
Is there further debate on the amendment? I now recognize myself for 5 minutes.
Why don't they just strike the very last word?
I'm opposed to this amendment for several reasons. The committee is committed to fully understanding all the potential ramifications of CECL. That is why I, just this month, the subcommittee, rather, on investor protection and entrepreneurship and capital markets worked on this issue. In addition, I have supported legislation to require Treasury to study and report to Congress on CECL's impacts. This legislation became law last year, and as a result, Treasury will send us a report later this year. Therefore, I think it is a mistake to commit to legislation before we have this report. And so, while the committee, while the regulators are allowing for a 3-year transition period for certain financial institutions to adjust to the new standard, and this phase is in its addition to the delay FASB granted for community banks and unions until 2023. While the committee should continue to monitor the situation closely in a much more balanced way than this amendment suggests, it is also important we have strong safeguards and high-quality accounting standards that promote financial stability and transparency for investors.
Will the chairman yield for a discussion?
Yes, I will yield to the gentleman
I
from
think
Missouri.
that our staffs are discussing here a change to the amendment, which I would accept. And the change is on the second last sentence, that change the word will to may, and strike the very last sentence. And if you're agreeable to those changes, I would be agreeable to those changes.
It's further up.
And I think by doing that, we still adhere to the intent of what the amendment is trying to do, which is restate, again, the concerns that everyone in this committee on a bipartisan basis had with this accounting standard. The very last sentence says we will take legislative action this year, which if we can't do that, that's fine with me to strike that.
Okay.
And the word will there, we can debate this, but the study will show that it will exacerbate. Since we don't have the study yet, I think we can say that it may exacerbate, which should be a word that I could accept. So if you're willing to take those two changes, which our staffs have kind of negotiated, I'm okay with that.
I appreciate the gentleman's wording to help resolve the concerns that you may have, and I certainly will accept that.
Okay, with that, I'm ready
Without
to go.
objection, such is the order.
Thank you, Madam Chair.
Is there further debate on the amendment? If not, the amendment modification has been accepted. So all those in favor of the amendment say aye. Aye. Those opposed, nay. In the opinion of the chair, the ayes have it, and the amendment is agreed to.
Madam Chair, I have another amendment.
Is there further debate on the amendment?
Madam Chair, I have another amendment.
Gentlemen. We will pause and allow copies of the amendment to be read. Where is it? Do they have the amendment?
We want to move forward with a little bit.
Excuse me. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. Luke Demeyer. Add at the end the following: risk transfer.
I move the amendment be,
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
thank you, Madam Chair. In 2017, in the aftermath of Hurricane Harvey, the National Flood Insurance Program paid out $8.6 billion in claims related to losses from the disaster. These liabilities could have actually been higher, however, if the program was not allowed to reinsure a portion of its risk with private insurers. Due to this risk sharing, the taxpayer was able to avoid over $1 billion in losses. And later that year, with another hurricane that occurred, again, we were able to avoid another $1 billion in losses as a result of reinsurance that the NFIP had taken out. The effectiveness of NFIP's reinsurance program is just one of many examples of how federal insurance and loan programs can limit taxpayer liabilities. Other similar successes include the credit risk transfer activities of Fannie Mae and Freddie Mac, and the risk-sharing program at the Export-Import Bank. In fact, the most recent legislation passed by this committee to reauthorize the NFIP and Ex-Im Bank each contain provisions that would improve the ability of these entities to transfer risk away from taxpayers. The idea of credit risk transfers has been a long-standing bipartisan practice in this committee. The ability for FEMA to shift flood insurance risk to the private sector was actually established in Biggert-Waters' NFIP reauthorization. Despite the positive results of these efforts, other federal agencies with similar programs lack the authority to utilize credit risk transfer arrangements. According to GAO, there are as many as 148 federal programs that provide federal insurance and other activities that transfer risk or losses from adverse events to the government, i.e. the taxpayers. Having all of these 148 programs examine the risk they have on their books and look at ways to lower that risk for taxpayers is common sense, good governance. My amendment today simply says it is the view of the committee that federal agencies should explore risk transfer options and, if practical, employ that risk transfer. This will help with extraordinary economic downturns and natural catastrophes. Considering the increased overall population of the United States, particularly in high-risk coastal areas, it is only a matter of time before our next weather event occurs and forces taxpayers to foot the bill. We must look to alleviate this burden and allow the private sector to take on this risk if it makes sense to offload it. In addition, the state of our nation's balance sheet could become a significant impediment to America's future growth. It is imperative to pursue sensible strategies to reduce taxpayer liabilities. This will assist in speeding up an economic recovery and reducing the long-term impact on the economy. This committee has consistently shown bipartisan support for credit risk transfers. It is my hope that we will continue, and our committee will continue, to adopt this amendment on a large bipartisan basis. With that, Madam Chair, I yield back.
I now recognize myself for 5 minutes. I thank the gentleman for offering this amendment. We should certainly be exploring how we can effectively transfer risk from the federal government. However, I believe we should move forward with caution, as these risk transfer mechanisms have largely been untested in a recessionary environment. Further, we must ensure that each federal agency has sufficient discretion to determine whether risk transfers are appropriate for their operations and to what extent they are economical. So I thank the gentleman for making some changes to address these issues, And with those changes, I'm happy to support the amendment, and I yield back the remainder of my time. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Opposed, nay. In the opinion of the chair, the ayes have it, and the amendment is agreed to. For what purpose does the gentleman from Ohio seek recognition?
Thank you, Madam Chair. I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed.
Hey, this is the wrong amendment. This is the other amendment. Mark? That's fine.
The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. Stivers.
Madam Chair, move that we dispense with the reading.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes in support of the amendment.
Thank you. I'll be very brief. The committee was, and the chair was generous enough to support an amendment like this last year. As you know, Madam Chair, you and I have worked together to try to solve the issue of youth homelessness. And there's still an issue of the definition of youth homelessness that is not homogeneous between the Department of Education and the Housing and Urban Development Department. This just recognizes that we need to do more to try to address youth homelessness, try to figure out how to enumerate the problem and then address the problem. It does not specify a single solution. It just says we need to focus on the issue of youth homelessness, and I am hopeful that you will support this and that the committee will support this. There are 1.5 million potentially homeless youth in the United States that are depending on us to try to help them, and I know the committee cares, and I want to try to make sure it's in our views and estimates, Madam Chair. I yield back.
Thank you. I now recognize myself for 5 minutes. I move to strike the last word. I want to thank Mr. Stivers for offering this amendment. I appreciate his passion for addressing youth homelessness. It's one that we certainly share. When I speak to families in my district who are dealing with homelessness, I see the toll this housing insecurity is taking on them, including their children, who can't concentrate in school because they are sleeping in a car at night. Every American has a right to safe, decent, and affordable housing. I'm proud of the work our committee has done this Congress to shed more light on the homelessness crisis, including passing my bill, H.R. 1856, the Ending Homelessness Act, which would provide $13 billion so that every person experiencing homelessness, including children and youth, has a roof over their heads. So we stand ready to work with members on both sides of the aisle to address this important issues. And so I'm very appreciative to Mr. Stivers for the work that he has done, his passion that he has really placed into trying to solve this problem. And I urge my colleagues to support this amendment, and I yield back the balance of my time.
Madam Chair, I want to just clarify the amendment would be added on page 2, line 36. I don't think that's clear in the amendment, and I apologize about that. But it would go on page 2, line 36, and I apologize that that wasn't clear on the amendment that we handed out.
Okay, without objection, such is understood.
Thank you, Madam Chair.
Cleared up.
Thank you for your support,
Yes,
Madam
you're
Chair.
welcome.
Yield back.
Thank you. Where are we now? Is there further debate on the amendment?
Madam Chair.
Who seeks recognition?
Move to strike the last
The
word.
gentleman from Texas, Mr. Gooden, seeks recognition. You are recognized for 5 minutes.
Thank you, Madam Chairwoman. I want to echo my praise for this amendment. In particular, our subcommittee is committed to ending homelessness among children and youths who remain a significant portion of the homeless population, and there are disturbing indications that this problem is getting worse. According to National Center for Homeless Education, 1.5 million students experienced homelessness at some point during the 2017-2018 school year, the highest number of homeless students in more than a dozen years, and a 15% increase from just 3 years ago. In identifying new strategies to end homelessness among children and youths, the committee will take a holistic approach of data produced by different federal agencies, including the Department of Education and the Department of Health and Human Services. Our committee is continuing to examine homelessness among individuals who serve their country in uniform, but because of their specific service or discharge status, don't have access to HUD, vouchers, or other sources of federally assisted housing. I want to thank the chairman of our subcommittee and also Mr. Stivers for their work on this, and I yield back.
Who seeks recognition? So what's the question? Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Opposed, nay. In the opinion of the chair, the ayes have it, and the amendment is agreed to.
I got an amendment at the desk.
The gentleman
Madam Chair, I have an amendment at the
recognized
desk.
for 5.
Oh.
We'll pause while the amendment is being distributed.
Right. Sorry. Financial transactions tax. How are you?
Okay. Okay, you do have to.
No, I am. My view. No reason to that.
The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. McHenry. Page
Without objection, the
17.
amendment will be considered as read. Mr. McHenry is recognized for 5 minutes in support of the amendment.
Well, thank you, Madam Chair. My amendment, I think, should receive unanimous support by this committee. It's simple. It states that the committee opposes any proposal that would negatively impact our capital markets. The financial transaction tax proposal is a tax on American retirement savings. The financial transaction tax, though small for each individual transaction, the weight of such of a transaction would harm middle-class Americans in their savings for retirement, their college education savings, and even the attempt for them to buy their first home. The financial transactions tax has been proposed by a number of people in the political process, from those in the House, those in the Senate, candidates for president. But let's look at the facts on what a financial transaction tax is. This is not a tax on the 1%. It is absolutely not. It is a tax on anyone who has any savings. First, savers will be hit. One study indicates that a mutual fund investor, that's an average everyday investor, may have to work an additional 2.5 years to reach the same retirement goal. just because of the financial transaction tax as proposed. That same saver might have to save an additional $250 per year for 20 years for each child in order to have the same college savings through a 529 plan. Second, this tax would adversely affect markets. We have the most robust liquid markets in the world, where our markets are the envy of the world. The financial transaction tax would be the end of American markets as we know them, and no one wants that. Even the Europeans that have proposed this have created so many carve-outs that it has no impact on revenue to their governments, nor to the markets. Third, these taxes almost invariably fall they almost invariably fail to raise the revenue projected. This has been tried in Europe. It didn't work. And nonetheless, Democrats here in the country are proposing similar plans and also big spending proposals to go along with the financial transaction tax revenue with absolutely bad math. If this weren't enough to convince my colleagues across the aisle, why don't we hold a hearing on this topic? Why don't we have a hearing on the financial transaction tax and what that would mean for the markets, what it would mean for families, what it would mean for the American economy. So the financial transaction tax, I believe, is a terrible idea for everyday Americans. And so I want us to ensure that we don't go down this road. I know that the two parties have different views of revenue to government and tax policy and spending policy, sure. But for this particular type of tax, you're talking about 2.5 years of additional payments and additional work in order to have the same type of retirement benefit the American people expect because of one tax. That's a bad idea. And so I think we should adopt this amendment. I think it's a reasonable thing for us to debate in this committee, and I think it's appropriate, given our oversight of the financial markets, that we ensure that we maintain the most liquid, the most vibrant markets and the envy of the world in our financial markets. And with that, I urge its adoption.
Will the gentleman yield?
Happy to yield to my colleague, the ranking member of the Capital Markets Subcommittee.
Well, thank you. And you summed this up absolutely correctly. And where this has been tried, it has failed. Where this has been discussed, it has frozen markets. We have some advantages here in the United States in our business climate, and one of the most significant is the depth and liquidity of our markets. And this is something that warrants more conversation if the majority is intent on moving ahead with this idea. We absolutely need to have a hearing, but I would hope that some common sense would prevail here, and that we would look at this for what it is, a kind of an empty promise of revenue coming in to the government, and we need to make sure that we are not engaging in class warfare, but we are actually engaging in building this economy and this marketplace. So with that, I yield back to the gentleman.
And I yield back.
I recognize myself for 5 minutes. I would like to basically re-describe this amendment more as a political act rather than a public policy real concern. All of the discussion about the transaction tax has been a discussion that really points out that it is and could be a very modest kind of tax because high-frequency trading is the fastest growing and least productive form of Wall Street trading. This practice bears no relationship to business profits or other indicators of economic health, and it benefits only a teeny handful of Wall Street traders while creating greater risk for the rest of the financial system. Any potential losses that are incurred from slowing the pace of trading pale in comparison to the benefits of reducing market volatility. The flash crash of 2010, which is widely blamed on high-frequency trading, saw the Dow Jones Industrial Average lose 10% of its value over the course of 10 minutes for no clear reason. half of all American households would be completely unaffected by a financial transactions tax. Many consumers would actually save money because the mutual funds they invest in would see reduced overhead costs. So there are several different versions of this proposal, both in this Congress and by various presidential candidates. But estimates of the revenue generated from these proposals are often disputed. There's a simple reason why revenue estimates are so uncertain. The fundamental purpose of a financial transactions tax is not to generate revenue, but to tramp down on the riskiest form of Wall Street speculation. So according to the Center for Economic and Policy Research, over 30 countries have some form of a financial transaction tax, including Australia, the UK, and Hong Kong. The Institute for Tax and Economic Policy has found that a financial transactions tax would actually make markets more efficient. That's why Republican regulators like Sheila Bair and business leaders like Warren Buffett have spoken favorably about the idea. So, with all due respect, this amendment is not meant to advocate considered policy. But again, what I just alluded to, but to make a political point against a presidential candidate. Similarly, this amendment is not related to policy under the jurisdiction of this committee. And for these reasons, I would urge my colleagues to reject the amendment. Is there further debate on the amendment?
Madam Chair,
Who seeks recognition?
gentleman from Michigan.
Gentleman from Michigan seeks recognition.
Thank you, Madam Chair. I move to strike the last word.
Gentleman is recognized for 5 minutes.
The gentleman yield.
Yes, I'm happy to. Happy to yield to that.
Well, if I may respond to the Chairwoman's assessment here, it is a serious policy concern. I think it is a nefarious tax that will harm average everyday investors, as I outlined. This is a major component of our committee jurisdiction, the regulation of capital markets. A tax like this would be enormously harmful and bad for our markets. The reason why the UK tax, financial transactions tax, is not harmful to their markets is because they have massive carve-outs, and their government revenue is very small as a result of their massive carve-outs on financial transaction taxes. It looks more like the regulation of real estate transfers in some jurisdictions than it does a major capital markets tax. Additionally, when you say this is about politics, I read the budget views and estimates and all the shots taken at President Trump as politics. And that's fair. I think Republicans and Democrats since 1975, when this budget views and estimates process, which quite frankly we didn't create but we have to live under, this sort of charade that we have to come up with these budget views and estimates is actually dumb policy, but we have to go about it, right? And so Democrats put their views in, Republicans put their views in, and later, hopefully quickly, I'll be able to offer my amendment in the nature of substitute. We can have that debate, and we can kind of move on with our lives because I don't think anybody's even going to tweet about our budget views and estimates debate, right? And then we can get on to serious matters of public policy. But right now, this is the opportunity for us to say we have some disagreements on areas of policy. The majority gets to determine what we debate in this committee. That's the nature of being in charge. I don't think Chairwoman Waters would be interested in giving up that power, nor would any chair. But this budget views and estimates is one opportunity for the minority to have a broader conversation about our jurisdiction and our priorities on this side of the aisle. And one of our priorities is to stop harmful tax policy that would hurt average everyday
Will the
investors.
gentleman yield?
And happy to yield back to the gentleman from
it's actually my time, Madam Chair, and I've got a question for the ranking member. We heard the chair talk a lot about high-frequency trading, and that this wasn't about raising money, it was rather to slow down trading. Am I missing something in your amendment that I see no reference to high-frequency trading or the risks of that?
Correct. So what this would be, if you have a mutual fund, you have a financial transaction that puts your dollars into a mutual fund.
By the way,
so that's one tax.
To the ranking member.
Sorry. That's one tax. That mutual fund then buys perhaps 500 stocks as a component of the money you put in. That's 500 transactions. And that assumes that they're only making one purchase of that stock. So your movement into a mutual fund potentially has hundreds of different tax opportunities with one transaction from your savings account or your checking account or out of your paycheck into the financial markets. This is not a single thing. It is hundreds of transactions that occur, or thousands of transactions occur, even with small dollar contributions into the marketplace. That's why it's so nefarious. Yield back.
And reclaiming my time, and fair to say, you have nothing in here talking about slowing the speed of trading down or high-frequency trading. I mean, that to me seems like a completely different conversation than what we are dealing with here, which is whether we are going to subject everyone, which includes virtually everyone who is listening or watching or in this, union members, union pensions, 401ks, you name it, anyone with a retirement of any sort is suddenly going to be subject to having a tax put on that transaction. And as the old saying goes, if you want less of something, tax it, make it more expensive. We will have less trading, not in speed, in volume. And that is truly what separates us from the rest of the world as we create the markets that we have. The depth and the liquidity is so important. It's based on those. And so my time is expiring, but I just want to commend the gentleman for putting this forward, and I look forward to continuing this conversation, but I hope we abandon this bad idea. And with that, I yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, nay. In the opinion of the chair, the nays have it.
I ask for a recorded vote.
Recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. So we're not on it.
Madam Chairwoman,
Is it, yes?
I have an
Who
amendment.
seeks recognition?
Thank you. Kentucky, Bar from Kentucky.
Gentleman from Kentucky seeks recognition. You're recognized for 5
I have
minutes.
an amendment at the desk.
Amendment at the desk. We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year.
Without objection, the amendment will be considered as read. The gentleman from Kentucky is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chairwoman. And the current views and estimates read in part, and I quote, "Furthermore, the Consumer Bureau has continued its misguided policy to not supervise financial institutions for compliance with the Military Lending Act," unquote. My amendment would replace that language so that it would read, Furthermore, the Consumer Bureau has continued its policy to not supervise financial institutions for compliance with the Military Lending Act because the Consumer Bureau lacks the statutory authority to do so, as repeatedly stated by the director in testimony before the committee. The committee should therefore provide the Bureau with its requested authority by passing H.R. 2904, the Financial Protection for Military Families Act, to give service members the reliable financial services they deserve. Madam Chairwoman, my amendment corrects a misinterpretation of the Bureau's supervision authority for compliance with the Military Lending Act. The views and estimates suggests that the Bureau is somehow shirking its responsibility to our service members, but that's simply not the case. The Bureau does not currently have the statutory authority to supervise financial institutions for compliance with the MLA. It has the authority to enforce violations of the MLA, but it does not have explicit statutory authority to supervise compliance. My colleagues may recall that Director Kreninger conveyed this to the committee multiple times in hearings and letters. She sent the committee a letter on January 7th, 2019, asking us to pass legislation to give her this authority. She reiterated her request during her testimony before the committee on March the 7th, 2019, on October 16th, 2019, and when she was last here a few weeks ago on February 6, 2020. And so, I introduced a bill that would give the CFPB the authority it has asked for, H.R. 2904, the Financial Protection for Our Military Families Act. This bill is narrowly targeted to achieve the desired outcome that both this committee and Director Kreninger are seeking without the inclusion of any other partisan provisions. Yet despite the simplicity of this fix and the potential positive impacts on our service members of its passage, the majority has rejected my request to consider it. The Department of Defense doesn't want supervisory authority over financial institutions, and the CFPB wants it, but the statute doesn't allow it. So, Ranking Member McHenry and I sent a letter to the chairwoman asking that this legislation be included in the October markup. She denied us. We sent another letter asking for its inclusion in the November markup. Same outcome. The reality is that the Bureau is not supervising institutions for compliance with the MLA simply because of inaction of the majority and their refusal to bring up my bill for consideration. We have a leadership team in place at the CFPB that respects its statutory authority and is unwilling to venture into areas where Congress has not authorized it. This is a welcome change from the previous administration, where Director Cordray used the statute as a mere guideline and wrote his own rules. While it might have been Director Cordray's opinion that the Bureau's MLA supervision authority exists, the statute says otherwise, and the current Bureau Director is asking Congress for help. Here's the point. Simply wishing that the Bureau has supervisory authority over MLA compliance doesn't make it so. The statutory text actually matters. I know that there are some non-originalists, like Justice Ginsburg and Justice Sotomayor, who don't particularly care what statutory text actually says when interpreting the law. But as members of Congress, we should all deeply care about the meaning of legislation as actually expressed in statutory text. I'm sure we all share a desire to protect our service members and their families. But I can't sit idly by and let the committee approve these views without correcting inaccuracies and making yet another request that the committee pass my simple, nonpartisan legislation that the CFPB says it needs to help our military. As a member of both this committee and the House Veterans Affairs Committee, I must submit that if the CFPB is not supervising institutions for compliance with the MLA, it's not because of the Bureau's unwillingness to do so, it's because of the majority's failure to give it the tools it needs. We need to amend the views to more accurately describe the problem and present a very simple solution. That's what my amendment does. I urge my colleagues, if you care about veterans, if you care about Bureau supervisory authority, we need to amend the statute. Support my amendment, and I yield back.
For what purpose does the gentleman from Washington seek recognition?
Move to strike last line.
Gentleman is recognized for 5 minutes.
Thank you, Madam Chair. This amendment is unnecessary and in fact harmful and is therefore ill-advised, and I strongly urge my colleagues to reject it. not as represented here does this correct a misinterpretation. In fact, it affirms a misinterpretation, that of the current director of the Consumer Financial Protection Bureau, that she needs this clarification. She does not. And unlike that which was previously asserted, indeed, the current statutory text does provide them with the authority to do this, and they should do this. I actually read the relevant section of the statute when we last debated this bill. And furthermore, the author of that passage has since clearly indicated that that was what it did. So if you needed any other evidence, just from a practical standpoint, let us all recall that the Consumer Financial Protection Bureau did in fact provide this protection to members of the military for years and years under Director Cordray with great success, and to the incredible benefit of the men and women who put on uniform to defend us all. During that period of time, not only was their action lauded, people did not object, and absolutely unlike just about every other aspect of the Consumer Financial Protection Bureau, it was not a point that was litigated. So it occurred for years, it was broadly lauded, nobody litigated, and yet, under the new regime, they have unilaterally decided to discontinue it in, I think, clear contravention of the actual text of the underlying law. It would therefore be harmful for us to pass this and suggest to the Bureau that they don't have the authority to do what they actually do. It gives them an excuse not to do it. If they want to do it, they can do it. They have done it, and again, to great success. So therefore, I urge my colleagues to please vote no on this unnecessary and in fact harmful and in fact ill-advised amendment. With that, I yield back, Madam Chair.
For what purpose does the gentleman from North Carolina
Move to
seek
strike the last
recognition?
word.
The gentleman is recognized for 5 minutes.
Well, first, I want to commend Mr. Barr for offering this and his long-term commitment to this very issue, as members of this committee know. The intention of Mr. Barr is not to get a vote, but to get the result. And I think that's what our men and women in the military need and deserve. This is needed statutory authority. It has to go somewhere. And when a Republican is proposing that that somewhere be the Bureau that my Democrat colleagues are so deeply in love with, I think even if it's offered by a Republican, it's probably a reasonable thing to maybe think about accepting. And just because it's Mr. Barr offering it, I don't think you should discount the value of what he is proposing here, both in legislation, previous amendment, and now with the amendment to the views and estimates. Have no fear, we're trying to improve what we think is a bad document on views and estimates, but it's not going to change the overall assumption that we have between the two parties of budget views and estimates. So why not have just a couple things that seem maybe bipartisan and reasonable in your offering of budget views and estimates? With that, I'd yield to my colleague from Kentucky.
I thank the ranking member for his comments, and I don't doubt the sincerity of my friend, the gentleman from Washington, and his reading of the statute. I don't even doubt that his statement about the views of the author of the passage of the statute. But the fact of the matter is there is a debate and there's ambiguity about the meaning of the statute, and the text is not clear. It's not clear. We know it's not clear because there's competing interpretations of the statute. Even if you hold the position that Mr. Heck holds, that the statute does confer supervisory authority to the Bureau, that is not a uniformly held position. There is ambiguity, there is a debate, there is a conflict in the interpretation of that statutory language, and I would submit, far from being clear and unambiguous, there is a major ambiguity in whether or not the text confers that. So we all want to get to the same place. I know Mr. Heck's position is the Bureau should have supervisory authority. That's my position as well. Let's clear up the ambiguity. It's a simple amendment. It's a simple amendment. If there's a debate about what the statute means, let's clarify it once and for all. Director Kraninger wants the authority. She wants it. The Bureau wants it. And the fact that Director Cordray misinterpreted the statute for several years doesn't make it so. They may want to have supervisory authority, but at least this director, this Bureau, has a contrary interpretation of the statute. So let's clarify the ambiguity. And if you still disagree, let me submit this to you. Whether it has been litigated yet or not, we know what the outcome would be under the Chevron precedent. Chevron is very clear that if there is an ambiguity in the statute, if there is competing interpretations of a statute, if there's an interpretation from one administration that changes to the other administration, what do federal courts do in that case, applying the Chevron precedent? They defer to the interpretation of the regulator. If it's a reasonable interpretation of an ambiguous statute, guess who wins? The Bureau. And in this case, this Bureau, like them or not, they would prevail under their interpretation of the statute. So if you really care about veterans, if you really care about protecting veterans from predatory lenders, if you actually care, what you would do is clarify the ambiguity, which is what my bill would do, which is what Director Kraninger is asking for, which is what service members deserve, and the only people that are blocking protection of our veterans are the majority in this committee. So let's stop the political games. Let's clarify the statute. Let's give the veterans the protection they need. Let's give the Bureau the statutory authority that they have requested. And with that, I urge all of my colleagues on both sides of the aisle to stop the political games and give the Bureau the authority they have requested. I yield back.
I now recognize myself for 5 minutes. The Military Lending Act became law in 2006 with bipartisan support and provides critical protections that active duty service members and their families count on to protect them from predatory loans and credit gouging. It is well established that the CFPB has supervisory authority over the Military Lending Act. Committee Democrats, led by Representative Hecht, and I sent a letter to Director Kraninger explaining this, while service member advocates, veterans' rights groups, members of Congress, and state attorneys general have all voiced concern over the CFPB's decision to cripple its MLA enforcement program. Consumer Bureau leadership incorrectly maintains that under federal law, the Consumer Bureau may not cover MLA compliance. It is in its supervisory exams. I continue to be disappointed by Director Kraninger and her illogical stance that she does not have the authority to conduct supervisory examinations for violations of the Military Lending Act. Congress granted the Consumer Bureau broad supervisory authority to oversee a wide range of regulated entities, including amending the Military Lending Act to give the Consumer Bureau, along with other federal agencies that oversee other financial institutions, the authority to enforce the MLA. As Representative Heck explained to Director Kraninger in a recent hearing, legislation is not needed, and the Consumer Bureau should immediately resume MLA exams so they are not leaving service members and their families open to the wide ranges of abuses that necessitated the Military Lending Act in the first place. Our brave servicemen and women deserve better than this. Thus, I would urge my colleagues to oppose adding this amendment to the Budget Views and Estimates document, and I yield back the balance of my time. Is there further discussion, further debate on the amendment? If there's no further debate on the amendment, the question occurs on the amendment. All those in favor of the amendment say aye. Those who oppose, nay. Nay. In the opinion of the chair, the nays have it.
I request a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the Committee Rules, the vote on this question is postponed. Are there further amendments?
Madam Chairwoman,
Who seeks recognition?
Barr from Kentucky.
The gentleman from Kentucky, Mr. Barr.
I have another amendment at the desk.
We will pause to allow copies of the amendment to be distributed. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year.
Without objection, the amendment will be considered as read. The gentleman from Kentucky is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chairwoman. This amendment is designed to address the environmental and social governance section of the views and estimates on page 6. This exercise by my Democrat colleagues is nothing more than a desire to name and shame companies, and will do a very little to provide material information to the investing public who are making important investment choices. The Securities and Exchange Commission Chairman, Mr. Clayton, when asked about ESG investing in an interview at a financial conference last year, noted that, quote, lumping E, S, and G together is difficult because they are quite different, unquote. Commissioner Hester Peirce described ESG as, quote, scarlet letters that stand for enabling shareholder graft. She has repeatedly stated that forcing companies to disclose so-called ESG metrics would not provide any additional material information to investors that is not already required to be disclosed, and would be incredibly difficult to quantify because there is not a way to measure ESG in a way that would consistently apply to all public reporting companies. There continues to be a troubling trend of large money managers or other financial institutions giving in to the demands of environmental extremists and the far left. This has significant downstream implications on the investing public. By arbitrarily limiting the availability of investment options, these institutions are compromising returns and therefore their customers' financial security. I think of hardworking middle-income savers in central and eastern Kentucky struggling to save for a retirement, struggling to save for college for their kids, and having public companies or asset managers pressured and bullied into misallocating resources to the detriment of shareholders, to the detriment of middle-class savers because of some political correctness at the Davos conference. That, to me, is unconscionable. It is very dangerous if we start to politicize access to capital, if we politicize the allocation of capital based on someone's politically correct views on Wall Street. What I care about is Main Street savers. And when we go down this road, we are opening the door to a massive misallocation of resource that will compromise and undermine maximum investor returns. The point that my colleagues seem to miss with their barrage of disclosure bills is that companies are already required to report information that is material for investors and potential investors to make informed decisions. If information is material, it is already in the disclosure. My colleagues think that by forcing multiple new onerous and costly disclosures on companies will somehow solve the underlying issues, will somehow deal with climate change. In reality, it'll make no meaningful difference and will only increase costs, regulatory burdens, and risk of litigation for the reporting companies. The companies can't just eat those costs. The costs will trickle down to their customers, employees, and investors. And when public companies make bad decisions like denying access to capital to fossil energy companies, all that does is it diminishes research and development, diminishes investment in clean coal technology, diminish innovation in the way that fossil energy companies conduct their operations, and actually undermine the ability of fossil energy companies to innovate in a way that will actually solve the problem of climate. So this is a terribly bad idea. Irresponsible calls for excessive disclosure burdens and politicizing the access to capital more broadly can and will have meaningful negative impacts on retail investors and retirement savers. And unwittingly, what this will do is diminish innovation, research and development, and the ability of fossil energy companies to actually find solutions, real solutions, market-based solutions to the issue of climate. This will hurt the environment. It will not help the environment. It will hurt the environment because no longer will these companies be able to deploy capital in innovative ways that encourage emissions control and other innovative ways to develop through technology, better ways to solve these issues. So let's advocate for middle-class savers. Let's not encourage the misallocation of capital, and let's not diminish the access to capital for companies that can actually invest in technology and innovation in ways that will actually advance environmental stewardship. And so I encourage all my colleagues to support this amendment and yield back.
I recognize myself for 5 minutes. I strongly oppose this amendment, which would strike the views of the committee on environmental, social, and governance issues. These issues include climate change, political spending, human capital management, and human rights and shareholder rights, all crucial issues to investors in our public companies. For example, the impacts of climate change pose an enormous risk to our nation's economy and financial markets. The U.S. Fourth National Climate Assessment found that in the worst-case scenario, the negative impacts of climate change could cost the U.S. economy as much as 10 to 14% of its GDP by the end of the century. Yet, currently, only a small percentage of companies report the exposure to climate risk, leaving investors without the critical information they need to make the best long-term financial investment decisions. According to a recent study, market prices for public company shares fail to factor in the potential cost of climate change and environmental exposure to the tune of trillions of dollars, exposing millions of hardworking families and retirees to enormous financial risk. At a hearing before the Investor Protection, Entrepreneurship, and Capital Markets Subcommittee last year, a representative for CalPERS highlighted the need of required disclosure by stating that, quote, investors need companies to provide a detailed explanation of how each significant climate-related risk affects the company, as well as disclosure of exactly how the company plans to address and manage the risk, end quote. By requiring companies to disclose information relating to the financial and business risks associated with climate change, the market can better access the risk that global warming poses on public companies, help protect the financial futures of hardworking families, and incentivize companies to make critical changes to address climate change. So I would urge my colleagues to join me in supporting our efforts to provide investors and the market with critical information to protect their savings and help address climate change. Who seeks recognition?
Gentleman from Ohio.
Okay. For what purpose does the gentleman from Ohio seek recognition?
I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chairwoman. I want to commend Mr. Barr for this amendment and highlighting the need to protect shareholder values. Shareholders are, in fact, the owners of corporations. While stakeholders clearly have a stake, thus the name, the shareholders decide the purpose to operate the firm. So when you look at the goals of the majority highlighted in these budget priorities, frankly, it says we're going to undermine the ownership rights of the shareholders. And who are the shareholders? Let's look at CalPERS, for example. Their pension's underfunded by about $1 trillion. And why is it underfunded by this? Well, partially because the state hasn't reserved enough or had adequate reforms. But the other part is they've pursued environmental social goals, all kinds of agenda items other than their fiduciary duty to deliver returns for the owners of these shares, i.e. their members. So it has big consequences, what we're talking about here, and it undermines the whole principle behind the great capital markets that our nation has built. It is ground zero for this battle between capitalism and socialism, the idea that we're going to do these name and shame games to try to, frankly, harm the owners of the capital. And the owners of the capital aren't billionaires like Michael Bloomberg or Donald Trump, though I'm sure they own some shares of things. They're regular workers, teachers, public workers, union members, factory workers with 401ks and IRAs. And it's not to try to look out for their interests. It's in spite of their interests. It's to destroy their capital by having firms pursue an agenda that is set by the Democratic Party or further left members like Democratic Socialists. It is not to pursue the interests of the firm or the owners of that capital. And so I think it's a vital argument that Mr. Barr's made, and I'd like to yield the balance of time to him if he'd like it.
I think my friend, and I think he said it well, the only other thing that I can add to the discussion is, again, what we're talking about here is restoring the idea that the shareholder is the owner of the company and that a firm has a fiduciary obligation. The directors and the officers of public companies have a fiduciary duty to maximize shareholder returns. We're talking about middle-class savers who are at risk when the company's purpose is politicized and when their scarce resources and savings are diverted to politically correct causes that do not advance their interests, that in fact sometimes run counter to their interests and result in a massive misallocation of these individuals' investment and compromise and undermine their returns. We can't afford that at this time in this country when we have a massive personal savings crisis in this country. The job of a public corporation is to maximize returns for those middle-class savers. And if because of ESG requirements, companies go on a wild goose chase and go down a political rabbit hole and misallocate those resources to some politically correct cause, guess who that hurts? That hurts the middle-class savers of this country. So instead of politicizing these companies, let's focus on the owners of the companies, the middle-class Americans who need to maximize returns when they invest in these companies. And as I said before, the intention of focusing on climate change is maybe a very worthwhile cause, and it's something that Congress should be dealing with, and we should be focused on that. But we should not be forcing corporations to be enlisted on a compulsory basis into some political agenda. That's not their job, and that's not in their area of competency in many cases. And in the cases where it is in their area of competency, particularly energy companies, what we ought to be doing is we ought to be unleashing access to capital to those companies so that they can actually invest in technologies that will actually improve the emission standards and the way in which they produce energy. Depriving these companies of access to capital is the last thing you want to do if you really care about climate change. What you want to do is you want to unleash capital availability to these companies so that they can actually innovate. But instead, what we want to do is we want to just feel good. And we want to punish middle-class savers by misallocating or forcing companies to misallocate their resources and starve fossil energy companies the capital that they need to innovate and become cleaner companies. That makes no sense whatsoever. Everyone's a loser in that case, and that's why I urge everybody to support my amendment. Yield back.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. Nay. The nays have it. The amendment is not agreed to.
Recorded vote, please.
A recorded vote has been requested. All in favor of a recorded vote shall raise their hand and be counted. There is sufficient second, and a recorded vote is so ordered. Pursuant to Section C5 of Rule 3 of the committee rules, the vote on this question is postponed. Are there further amendments?
Madam Chair, I have an amendment at the desk.
The gentleman from North Carolina is recognized for 5 minutes. We'll pause while the amendment is being distributed.
They have it? Okay, very good.
The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021, offered by Mr. McHenry.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to support the amendment.
Well, thank you, Madam Chair. As I outlined in my opening statement, I think there's bipartisan concern about the nature of the Chinese regime and what they seek to do economically and militarily, globally. The harmful impacts they've had on human rights for their own people and for their neighbors. And so this amendment is about Chinese investment. And the language is simple. It really directly goes to U.S. sanctions policy and the CFIUS process, the Committee on Foreign Investment in the United States, reforms to that important law that we made through this committee. That was bipartisan in the last Congress and has had I think, positive impact on our foreign policy and our economic policy. And so what this amendment does is to say that that should be the focus of our policy, is that CFIUS process and sanctions. And then when we get beyond that, much of the debate about investment in China or Chinese investment in the United States becomes quite difficult for us to have the proper nuance to affect good policy here in the legislative branch. We have set up a process in a bipartisan way. And so, for instance, our sanctions policy, we have a very solid process to sanction bad actors, whether they be Russian, Chinese, or a number of regimes around the globe, or individual actors that are seeking to do us harm. We also have export controls. We have really important pieces of law that we have honed. And what this amendment is saying is we should direct our attention to those processes so that we actually can have better policy in communicating to the marketplace. And we have the tools necessary to take on bad actors. So instead of the issue of export control, for instance, we have technology transfers that we limit to regimes that seek to do us harm. And we have that process in place, and we've had, I think, a thoughtful approach and thoughtful policy now. So this is also directed not just at the CFIUS process, export control, and sanction policy, but today we're also hearing new calls for expansive prohibitions on Americans' outbound investment in other countries, especially China, regardless of what the Chinese company does. Such a prohibition is even broader and far broader than the CFIUS ideas our committee rejected last year. And like those ideas, an investment ban ignores the fact that the U.S. government already has specialized authorities to go after Chinese entities aggressively. For example, if we don't want to export sensitive technologies, we can block a Chinese company through export controls, as I said. And if we don't want outbound investment from a firm, if we don't want inbound investment here in the United States from a firm, we can prevent it through the CFIUS process. And if we want to prohibit all business dealings with a Chinese entity, the Treasury Department has sanction authority. So we've dealt with this, I think, adeptly in smart policy. This amendment is directed to say that, yes, our view on China is that we should use those three sets of policy areas and get at it. Now, I also think it's important that whether it's for Democrat views and estimates or Republican views and estimates, that we should both include language that says that we have concern about China. We may disagree on how to do that, but what this amendment is trying to strike at is that we already have those laws that we've passed in a bipartisan way, and we should adhere to those laws in taking on bad actors, whether they be in China, Russia, other European or Asian folks, or anywhere in the globe in particular. So I would ask support of this amendment, and happy to talk with a majority in further detail. And with that, I yield back.
I yield to myself 5 minutes. I think that Mr. McHenry accurately described that this subject matter is bipartisan, and that we have worked for some time on trying to make sure that we have policies that are adequate. And I too am concerned about broad brush restrictions on outbound investment, and I tend to agree that they fail to prevent foreign capital flows to bad actors. I'm just wondering, if we take a look at this amendment, in the sentence that refers to broad brush restrictions, could we add the word also to the language that I think would make it even more comprehensive and stronger?
Will the gentlelady yield?
I yield to the gentleman from...
So the notes that we got, that staff shared, it would say, with respect to the People's Republic of China, the committee believes that flexible targeted sanctions are generally more appropriate, that is our language, generally more appropriate tools to change the behavior of Chinese entities than broad brush restrictions on outbound investment. What you all are proposing, what the majority is proposing, is it would say the committee believes that flexible targeted sanctions are also appropriate tools. That means it's additive. What we're trying to say is that it is more appropriate for us to use sanctions than it is broad brush restrictions. What you're saying it is also, I think it diminishes completely our intention and makes this a non-statement. And so I'm happy to work on other language if this is not. But I would reject the word also because it eliminates more appropriate. So that's my quick reading of it. It's something I'm happy for us to talk through at the staff level if there are other options here.
Reclaiming my time, would the gentleman agree that your reference to broad brush restrictions is what you are describing is not enough? That
yes.
There should be more.
More, yes.
And so the addition of the word also, with respect to the People's Republic of China, the committee believes that flexible target sanctions are also generally more appropriate tools to change behavior. So I don't think that diminishes it at all.
I'm sorry, then if the general lady would yield.
Yes.
If you just want to add are also generally more appropriate, the note we got back was striking generally more. So I don't know if this is a miscommunication.
I believe that adding also is what was intended.
Okay. So if general lady would yield. So in your reading, the committee believes that flexible targeted sanctions are also generally more appropriate. I'm happy to accept the addition "are" between "are" and "generally" of the word "also."
Yes.
Yes, and I'm happy to accept that language. I think that is more. I think it's quite acceptable. Additionally, and happy to accept that language as a friendly amendment.
Reclaiming my time. I'm okay. I want to move on. I appreciate the gentleman's acceptance of the suggestion, and I think that it maintains your intent. And I would ask the committee members to support the amendment.
And if the general lady will yield.
I yield to the gentleman.
I thank you for, I think, what is a thoughtful amendment and a substantive of conversation on this. And so I thank the gentle lady, and I think it's a nice statement that we can both agree that we were unified to a certain degree about previous committee policy and our forward-going view of China, and I think that's a healthy thing. And I thank the chairwoman.
Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. In the opinion of the chair, the ayes have it, and the amendment is agreed to. Is there further? Are there further?
Request, no.
Oh.
She accepted it.
Are there further amendments?
Move to strike the last word, Madam Chair.
Who seeks recognition?
Hill of Arkansas.
Gentleman from Arkansas. We will pause to allow copies of the amendment to be distributed. What is it? Strike the last word of either. The clerk will report the amendment.
Amendment to the views and estimates of the Committee on Financial Services offered on matters to be set forth in the concurrent resolution on the budget for fiscal year 2021 offered by Mr. Hill, page 14, line 14.
Madam Chair, I move dispensing the reading of the
Without
amendment.
objection, the amendment will be considered as read. Gentleman is recognized for 5 minutes in support of the amendment.
Thank you, Madam Chair, and I want to thank the good work of the bipartisan staff on this subject of the concern I have about making sure that the authorization of this Congress is completed for the International Finance Corporation. And in the ensuing few minutes, this amendment reflects some of the concerns that the chairwoman reflected. The initial amendment now says the committee supports the authorization of this multilateral agreement during this Congress, which is something that the chairwoman and I share as an important objective to meet the needs of our multilateral partners and the reputation of the United States in not holding up the IFC authorization. But I changed the amendment, Madam Chair, to include with appropriate reforms, and is encouraged by the progress that the committee is making with the Department of Treasury to mutually agree to such reforms. So I hope that's the kind of direction that the chairwoman was interested in order to recognize that she's working hard to, first of all, get this IFC authorization complete so that our international partners can fund the International Finance Corporation here sooner rather than later, but recognize the hard work and diligence that she's had in working with the World Bank and with the Treasury Department on the reforms necessary for the IFC.
Will the gentleman yield?
I would yield to the chair.
I'd like to thank the gentleman for his concern and his work in this area, and I do appreciate the fact that you offered word would accommodate my concerns about continuing the ability to negotiate with the IFC for these reforms, and I'm appreciative. And this is the new language. If the gentleman would continue to yield time to me, the staff has reviewed the language, and the committee also notes the concerns of Oxfam International, which testified at a November hearing on these authorization requests, that reforms related to transparency and for-profit schools. And what is being suggested here is that, yes, we're accepting of the language that you propose, but we should also include this concern. And so if we could solicit your patience while we make sure that the language, your language and our language, is put together so that the concerns are recognized by both of us, I would appreciate it very much. And I yield back.
Well, I thank the chairwoman, and I would consider this language and look forward to seeing it in detail for your unanimous consent request to make that modification, but I would like to see it before I agree to it.
I think that is a fair request of the gentleman.
No, we're...
Come on. Is this all up?
He wants you to say this.
That we said this.
Madam Chair, I've had an opportunity to review the language, and I accept these amendments to my amendment.
Thank you very much. I appreciate that. The gentleman has accepted the amendments to the amendments, and I suppose that we have to have it redrafted. Is that correct? Does it have? It does not have to be redrafted. Thank you very much.
So reclaiming my time, I would recommend the committee adopt my amendment to page 14, line 14, as with the changes suggested by Chair Waters.
Thank you very much. Is there further debate on the amendment?
And I yield back the balance of my time.
If not, the question occurs on the amendment. All those in favor of the amendment say aye. Those opposed? The ayes have it. The amendment is agreed to. Further Amendments?
Madam Chair, I have an amendment at the desk. And I might add, the final
We will
amendment.
pause to allow copies of the amendment to be distributed. This is a big one. The clerk will report the amendment.
Substitution amendment to views and estimates for the fiscal year 2021 budget resolution offered by Mr. Patrick McHenry of North Carolina. Strike everything on line 1 and all that follows and insert the following.
Without objection, the amendment will be considered as read. Gentleman is recognized for 5 minutes in support of the amendment.
Well, thank you, Madam Chair. What we have before us is just the top line of what House Republicans would like to prioritize. As I said at the beginning, prioritize for our budget views and estimates. What you see here is a pretty straightforward set of language. We have disagreements on a number of issues between Republicans and Democrats on this committee. But as I outlined at the beginning in my opening statement, Democrat leadership here in the House of Representatives has already said we're not going to do a House budget resolution, failing to comply with the 1974 Budget Act. And that failure to offer a budget resolution makes this markup of budget views and estimates really a moot point. So rather than to put together a massive document to say that we have different views on budget views and estimates, I realize that since the budget is going nowhere because there will be no budget offered on the House floor, that we should just do the top line and we can have a discussion about some of these issues. We start by outlining economic growth. As I outlined in my opening statement, we've had a quite robust set of economic circumstances as a result of regulatory relief and tax relief that we passed last Congress, and the American people are benefiting from that. We believe that protecting our consumers is highly important, but we also need to ensure that we're fostering innovation so that financial products are commensurate and right with the needs of the people. We highlight that the committee believes that the CECL accounting standards will have an adverse effect on the cost and availability of credit, will have negative consequences. We further outline that we need to protect student borrowers. We've had that debate here in the committee, but I think it's important that student borrowers get protected as well from the adverse effects of bad federal policy that is foisting a generation further into debt in an unsustainable way. We also believe that we have to have accountability to the Consumer Financial Protection Bureau, and we need to strengthen our national security. And that means we need to ensure that not just what Mr. Hill outlined with international institutions, but also additionally with language on China and a more robust set of circumstances to combat terrorist financing. We need to make sure that our public markets remain the envy of the world, but we also need to ensure that the private markets, that we can get folks out of the private markets and into the public markets. That means we need to have regulatory right-sizing so that we have more public offerings for average everyday investors to participate in. And that means we need better investment opportunities for average everyday investors so they can get the upside that is happening in our market over the last couple of years, and more readily link labor with capital. That is the major debate we're having economically, on the debate between capitalism and socialism, as our colleague Roger Williams outlines in every hearing. But that larger debate about linking up average everyday people with the upside of our market, the upside of our economic growth, I think is a vital one. And then there are a number of other provisions we outline here, including protecting the nature of insurance markets and how they are regulated at the state level, that is a far healthier way to go about insurance regulation than having a one-size-fits-all approach at the national level, and highlighting the issues where I think we have some agreement, which is how we address homelessness in this country. The fact the need to address homelessness is real, but how we do that, we have a debate between members of our committee and actually disagreements between the two parties. And how we further strengthen the housing market. The need for GSE reform is real. That is a great work left undone from the financial crisis, and we should be about it in this committee. So, outlined broadly the points that we would like to make in this budget and views debate that we've had here today. And while I know that the majority won't accept it, I think we can just outline broadly that we do have some disagreements on the approach here. And that is okay. I think we've had a healthy debate this morning on this, and I do appreciate the areas where we have found agreement through Mr. Hill's amendment, my amendment, Mr. Hill's amendment on an important international institution, and my amendment when it comes to China. And so there are areas of agreement overlap, but we want to highlight a few differences that we have on this side of the aisle. And with that, urge adoption and yield back.
Further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye. Aye. Those opposed, nay. Nay. In the opinion of the chair, the nays have it. The nays have it, and the amendment is not agreed to.
Ask for a recorded vote.
A recorded vote has been requested. All in favor, recorded vote shall raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the Committee Rules. The vote on this question is postponed. If there are no further amendments, without objection, the previous question is ordered on the committee's views and estimates, and further proceedings on recorded votes are postponed. The chair now calls up H.R. 4351, the Yes in My Backyard Act of 2019. The clerk will report the bill.
H.R. 4351, a bill to require certain grantees under Title I of the Housing and Community Development Act of 1974 to submit a plan to track discriminatory...
Without objection, the first reading of H.R. 4351 is dispensed with. The gentleman from Washington, Mr. Heck, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance or on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 4351, offered by Mr. Heck of Washington. Strike all after the enacting clause and insert the following. Section 1, short title. This act may be cited as the Yes in My Backyard Act. Section 2, purpose.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for the purposes of further amendment. I now recognize the gentleman from Washington for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair, and thank you again very much for scheduling markup on this important legislation. I want to preface my remarks by reiterating that which you've heard from me so many, many times in this committee. This nation is suffering from a severe housing crisis, a severe housing shortage, which particularly impacts people, frankly, of lesser income. The truth of the matter is that we're probably somewhere between 7 and 10 million units short in this country. The truth of the matter is that this shortage is what is behind driving up rents, which is causing more people to be rent burden. In fact, I believe it's accurate to say that at this point in time, there is literally not a single county in the entire United States of America where if someone were working full-time at a minimum wage job, could they afford a two-bedroom apartment? This also contributes, obviously, to increase homelessness. So above and beyond all else, what we need to do is increase the supply of housing in this country, and in particular, affordable housing. One of the ways in which we can do that is, frankly, to request of local municipalities that at the time they submit for a community development block grant, they must also submit their plan to track and report on the implementation of certain land use policies that, in fact, promote housing production. 7 to 10 million short. And obviously, solving the housing crisis is not going to be one of those endeavors that is going to be undertaken by just one of the levels of government. This is going to require local, state, and federal government to weigh in on multiple fronts, as a matter of fact. Local governments can and do regulate the housing, the zoning, and the land use policies. We should not do that at the federal level, but we should, I think, enable them to spotlight or highlight what it is they're doing in order to move forward. Let me be very clear. I don't want the federal government to engage in land use planning. Let me be equally clear that there is literally nothing in this bill that would result in a municipality being denied a CDBG grant on the basis of their reporting. It's merely a matter of transparency. And as I like to say and have for decades, sunlight is the best disinfectant. This is a bipartisan bill. I want to, in particular, thank my colleague from Indiana for joining me in sponsorship, but the rest as well. I want to make sure you all know that this enjoys very considerable support among a large group of organizations externally. These include the American Planning Association, the Congress for New Urbanism, Council for Affordable and Rural Housing, Habitat for Humanity International, Housing Advisory Group, Leading Builders of America, Manufactured Housing Institute, Mortgage Bankers, National Apartment Association, the Realtors, National Leased Housing Association, National Community Stabilization Trust, National Multifamily Housing Council, Prosperity Now, Real Estate Roundtable, Smart Growth America, YIMBY Action, and Up for Growth. That is an unusual coalition of interests which don't always agree on a lot else, but they understand fundamentally we have to increase the supply of housing if we are going to do anything, especially for those who are struggling to make their rent payments, and that this is one important, albeit incremental step in enabling us to do that. If you want to increase the supply of affordable housing, this must be a part of that strategy. So let me conclude by once again thanking the chair very much for her putting this up for executive action today, and extend my gratitude to all those on the other side of the aisle who joined so many of us on this side of the aisle in taking this important step. And with that, Madam Chair, I yield back the balance of my time.
Thank you. For what purpose does the gentleman from Ohio seek recognition?
Thank you, Madam Chair. I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Madam Chair. I'll be very brief. I will not use 5 minutes. I want to thank Representative Heck for a very thoughtful bill and Representative Hollingsworth. This bill makes a lot of sense. You know, in Columbus, Ohio, Franklin County, Ohio, where I represent one of my 12 counties, we are already 54,000 units short of affordable housing. And I think we all know that, unfortunately, sometimes local policies can impact that. And I think this is going to do a great job of modifying the existing CDBG.
Okay, family. Hopefully you guys Hope you guys can hear me. All right, I'm going to break this down, and I'm going to give everybody a chance to definitely get in where they fit in and do what they do. There's a lot that we can break down and discuss, and you know, I may go a little fast only because the information is being disseminated very quickly. Those of you that have been listening to the FASB meeting, those of you that are understanding how this stuff is shaping up, I keep telling everyone that all of these events are connected, commercially as well as spiritually and divinely. So here's what we have. The Europeans, quote unquote, are talking as if they are opposing to CECL. Now let me remind you, how do you think we actually got the Federal Reserve Act? It's because the politicians pretended that they was opposed to it in order for them to implement it. So therefore, you got exactly what you asked for. I'm finna give you where you have to really expand your mind. Every trustee, agent, and notary, if you are melanated, how many times have you said to yourself before this information came to you, you might have prayed, you might have asked, you might have meditated for deliverance? And I always tell people, be careful what you summon, what you pray for, because you just might get it. A few years ago, I'm not saying a few years ago, a while back on this very broadcast on WTDTA radio, I made a comment, and it was during the time when Barack Obama was in office. And I alluded to the fact that even though he's doing all these things, you got to pay attention, because it's not what you say, it's what you do in commerce that determines who you are. And he has a fiduciary duty as a trustee. He's a constitutional attorney. And he has a nationality. And he's speaking on a frequency that a lot of people are simply applauding and not really paying attention to. See, all the great things that he did, one thing that Moors have to pay attention to is that Barack Hussein Obama did endorse the rights of indigenous people, which allowed you to go back under your particular convention and concept in order for you to be spared. He said the first country to recognize independence in what you call the United States was Morocco. And a lot of people immediately went in their mind to some foreign distant land. There's a part of your history that you don't even realize that's being played out right in front of you. See, under the Barack administration, he also put together the first or the final leg of financing for the Space Marines. Because all that praying brought forth a very interesting scenario. I keep telling everyone that all these things are connected. I keep explaining, and it's not like I'm saying I'm a psychic or any of that, because I'm far from it. I'm just an ordinary man that seeks extraordinary knowledge. But the information that's being given to you is for a higher purpose, notaries, agents, and trustees, because on February 26th, the actual celestial body has been summoned. It is now in this particular realm. It is orbiting for the next 47 plus days. Ironically, this is the time of year where taxes are being collected. E-Star, the Eastern Star. At this time of the year, the Inquisitioners already know where they're supposed to be on cue. And you, as the last administrators of the estate, you need to know where you need to be. Because by 2025, it was forecasted that silver would be the first element to be extinct from the periodic table. See, the only way silver and gold comes to the planet is through celestial bodies. Your melanin is like a magnet. It summons, it attracts gold and silver on a heliocentric level. But because you've been so disconnected about who you really are in this whole paradigm, they are extorting away your essence. What do you think they do with the placentas and all the other things that they extrapolate from your melanin? You're worth more dead than alive. That's spiritually and physically. And this information about all these particular acts is because they have to act a certain type way in order for you to consent. See, the Department of Treasury knows there's a massive tidal wave of Federal Reserve notes that are coming. So they're going to make it very easy for individuals to acquire those Federal Reserve notes because they're locking you in and locking you out of your own estate because you have given up your birthright for a few pieces of silver. And I say, while everyone is out there trying to use their Federal Reserve notes to go buy what the latest trinkets that the income taxes are letting them going to quote unquote get, they're going to miss a very significant aspect of what I'm talking about. Because for these next 47 days, your estate is right in front of you. It's orbiting the planet. You have to gravitate towards all the things that we're doing because in your prospective positions, you have an important role to play. I am only a messenger. I am only here to give you this information in order for you to make an informed decision. Because if you don't make a decision, one has already been made for you. The Europeans are letting you know that CECL is coming, and the banks don't like it. And so they're testing the water because they're the only ones that's buying their own derivatives. See, sovereigns already know what's going on. Matter of fact, as we speak, those that have Moorish blood and also Cherokee native blood or part of the last civilized names, your state has just been brought back into focal point. Matter of fact, there are some things that we will discuss. But I told you last week I have to now do what I hate to do, is I have to put everybody's feet to the plow, so to speak. I am in dire need of your accounting in order to substantiate the direction upon which you're going, because that's going to determine what part of that estate you are in line with. My job is to make sure that you have all of the facts, all of the information. But I am just a vessel. I can only lead you to water. I cannot make you drink it. Nor am I an extorter or an enabler. I'm just a conduit. I'm a pass-through. I can only respond to the questions that I am asked. I cannot plant a seed or provoke a thought. Everything that you're attempting to do rests within you. It rests within you. It rests within you. But keep listening, because if you listen long enough, you just might learn something.
The most important first step in our journey here legislatively is to share a sense of what the problem statement is. I as well thank him for affirming the intent and the language of the underlying bill. And I thank him for the spirit in which he offers this as continuing to make efforts to try to solve the very, very serious problem of housing affordability. That said, however, I am going to ask my colleagues to vote no. And I do so not in meaningful part because, frankly, I would have appreciated, as somebody who's been working on this bill for more than a year, a little more advanced notice to begin to incorporate the ideas of this amendment. The very first time I saw this language was literally a matter of seconds ago. But put that aside, because this isn't about personal considerations. It is, however, about what is in the best interest of the legislation. And as I indicated in my opening remarks, H.R. 4351 enjoys an unusual coalition of groups in support of it. I didn't use the word delicate, but the fact of the matter is this was a difficult conclusion to get to among so many groups that historically don't always agree on right approaches. And so the truth of the matter is that adoption of this amendment would not be in the best interest of 4351. And I'm a little hard-pressed to understand from a substantive standpoint what it would add to what 4351 would accomplish. And indeed, notwithstanding how characterized, in some quarters, the executive order reference, for example, was controversial. We've got agreement on 4351 among external stakeholders, and I think that there is substantial agreement, as indicated by the author of this amendment, internally on this. So my request is that you vote no in the best interest of the bill, which is in the best interest of us advancing the policy objective of creating more affordable housing in this way. I do so that with respect to the gentleman from Tennessee, but nonetheless ask you to vote no. And with that, Madam Chair, I yield back.
Is there further discussion of our amendments to H.R. 4351? If not, I recognize myself for 5 minutes. Members, we have a perfectly good bipartisan bill, and this amendment would undermine the bipartisan nature of this bill. And so I don't need to take up 5 minutes to just urge you to oppose this amendment so that we can pass this bill in a bipartisan fashion. Is there further debate on the amendment? If not, the question occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, nay. The nays have it. In the opinion of the chair, the nays have it.
Madam Chairman, I ask for a recorded vote.
A recorded vote has been requested. All in favor of a recorded vote should raise their hand and be counted. There is a sufficient second, and a recorded vote is so ordered pursuant to Section C5 of Rule 3 of the committee rules. The vote on this question is postponed. If there are no further amendments without objection, the previous question is ordered on H.R. 4351, and further proceedings on recorded votes are postponed.
Madam Chair, inquiry of the chair on today's schedule for members' knowledge.
Gentleman is recognized.
Well, if the chair would yield for a question about today's schedule, I think members were interested in when bills will be offered, as well as our expectations when we'll be in. I know we have floor votes in an hour or so on the House floor, and what is our expectation for the afternoon?
The committee will recess at about 12:30 and reconvene following the conclusion of the first series of floor votes to complete the markup of the bills that are left.
And with the chair will further yield. So the expectation is we're going to recess during the business day, but have to come back through the evening in order to deal with these votes. Is that the case?
Right after the floor votes. As I indicated, following the conclusion of the first series of four votes, we will be coming back to complete what amounts to 1, 2, 3, 4, 5 bills, 4 bills, I think, 5. Thank you very much. The chair now calls up H.R. 149. H.R. 149, the Housing Fairness Act of 2020. The clerk will report the bill.
H.R. 149, a bill to authorize funds to prevent
Madam
housing.
Chair, I ask that the bill be considered as read.
Without objection, the first reading of H.R. 149 is dispensed with. The gentleman from Texas, Mr. Green, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance or on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 149, offered
Madam Chair, I
by...
ask that the amendment be
Without
considered as
objection, the
read.
amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Texas for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair. I thank you for your lifetime of commitment to ending invidious discrimination. I'd like to thank the ranking member for indicating at the genesis of this hearing that persons among us, all of whom I believe to be in the circumstance that he mentioned, are opposed to housing discrimination. I want to thank the staff and the many co-sponsors that we have for the legislation. This bill addresses a portion of the unfinished business of the civil rights, human rights movement. And on yesterday, we had a bill that dealt with lynching. And I was very pleased to see that the overwhelming majority of persons in this House voted to make lynching a federal offense. There were some who didn't, but the overwhelming majority did. Well, we need a predicate for what we're about to do. And that predicate is the fact that Newsweek did a testing investigation on November 17, 2019. It took about 3.5 years to complete, 240 hours of secretly recorded meetings. And here's what they concluded: that 19%, that there is a 19% rate of discrimination against Asian Americans, 39% rate of discrimination against Latinos, 49% rate of discrimination against African Americans, and that the tool that can best be used to end this discrimination or deal with it was testing. They found that persons of color were refused service, that borrowers of color had fewer homes shown to them than their white counterparts, that inappropriate statements were made based on race, and that higher requirements on borrowers of color were placed on them as opposed to their white counterparts. All of this testing dealt with discrimination in housing. It was styled the Long Island Divide, the name of the report. This bill, Madam Chair and Mr. Ranking Member, amends Section 561 of the Housing and Community Development Act of 1987, which established the Fair Housing Initiative program that we call FIP at HUD. Interestingly enough, FIP was created by the Reagan administration to help families access free from discrimination and other forms of invidious behavior in housing, and to better understand the responsibilities under the Housing Fairness Act. This bill expands the nationwide testing program to detect and document differences in the treatment of persons seeking to rent or purchase housing or obtain or refinance a home or mortgage loan. It seeks to measure patterns of adverse treatment because of the race, color, religion, sex, familial status, disability status, or national origin of a renter, home buyer, or a borrower. It seeks to measure the prevalence and the nature of discriminatory practices across housing and mortgage lending markets. The bill designates this testing program as an eligible FIP activity. It is a bill that carries with it a $700 million price tag. I say that candidly, but I don't think that that is too much to deal with the type of invidious discrimination that we find in our housing market, $735 million to fund it over 11 years. I believe this bill will make a difference in the lives of people. It is a continuation of the unfinished business of the human rights, civil rights movement. The question that we confront today is not whether there is a way to deal with invidious discrimination. The question that we confront is whether we have the will to deal with invidious discrimination. My hope is that this bill will receive the same bipartisan support that the bill that we had on the floor yesterday received. I was very much buoyed by what I saw yesterday, and my hope is that yesterday's momentum will carry over to today. Again, it's not a question of whether we have the way to deal with this level of discrimination. The question is, do we have the will to deal with this level of invidious discrimination. With this, Madam Chair, I would like to announce that I have several documents that I'd like to place in the record. I have the report that I referenced, the Long Island Divide. I have a letter signed by more than 50 national and local organizations. I have a summary of support from more than 50 organizations. I have the National Association of Realtors letter. I have a letter from George Washington University Department of Sociology, and I have a letter from the Appraisal Institute, all of whom are in support of this piece of legislation. Time has come.
Without objection.
It is a bill whose time has come. I yield back.
I move to strike.
For what purpose does the gentleman from North Carolina seek
I
recognition?
move to strike the last word.
Gentleman is recognized for 5 minutes.
I believe this is a good faith effort put forward by Mr. Green to increase funding for HUD programs to uncover cases of housing discrimination. I'm concerned that simply increasing funding is not enough to dissuade bad actors or punishing localities that allow discrimination to transpire. I think that's what we should focus on. More importantly, it does nothing to compensate the actual victims of discrimination. In fact, the nonprofits that would get the funds would be the beneficiaries of the recovery of those funds. I think it should be the individuals that were harmed that should directly benefit as a result of the discovery of those discriminatory acts. So this legislation authorizes plenty of taxpayer funding to nonprofits, to advocacy groups, but absolutely fails to consider the victims, in my view. Instead of lining the pockets of nonprofits, Congress should be looking at real punishment for communities that do not enforce existing state or federal fair housing laws. Committee Republicans believe any type of discrimination should be uncovered and punished. Instead of asking for a blank check so organizations can uncover cases of discrimination, we need to look at the federal government's proper role in making sure that these crimes do not reoccur. And I think that is the direction we should be about. And I think there's an opportunity for us to have a bipartisan bill here, but what is being offered and the nature of how these monies will be distributed, I think that is an area that we have some disagreement. And so while we agree with the intent, I think we should go further and ensure that these monies recovered go right back to the very people that suffered the harm, the direct harm of these discriminatory acts, which has also been my longstanding view across the board for the recovery of funds, that it should go back to the people harmed directly rather than go to nonprofits who are trying to act in their stead, but to go to the actual individuals that suffered and were victimized through no fault of their own. And I think it's really important that we have proper enforcement of these very important laws that are groundbreaking, that took decades and decades and decades of work to ensure that are on the books. And we should have proper, tough, real enforcement, and then the recovery of those funds and the payment of those funds for those that did the harm, that did the wrong, should go directly to the people that they wronged, that they harmed. And so I think if we had a bill that did that before us today, I think you would see a unanimous vote, or I would hope it would be a unanimous vote. And so I agree with the intent. I do not agree with the structure created and outlined within this bill and the use of these monies. And so with that, I oppose it, and I know that committee Republicans will have amendments when we get to those, and would encourage members to consider those amendments so that we can actually have a bipartisan piece of legislation before us. And so with that, I yield back.
The committee
Madam
stands
Chair.
in recess.
Madam